Welcome to the Deep Dive, your shortcut to staying well-informed. Today, we're cutting through the data to uncover the real story behind Dollar Industries Ltd. You know, that familiar name weaving its way through the Indian garment and hosiery business.
That's right. And for this deep dive, we've got their latest investor presentation, a recent press release on their unaudited consolidated financial results, and the official outcome of their board meeting.
All hot off the press from August 11, 2025.
Exactly.
Our mission today is, well, to give you a clear, concise, and engaging overview of their Q1 FY26 performance, their key growth engines, and what strategic moves they're making behind the scenes to expand their empire.
Think of it as your express lane to understanding a major player in the apparel market.
Yeah, exactly. So after a quick glance, what's the first thing that jumps out at you from Dollar Industries' recent performance? Is there like a surprising twist in their Q1 story?
You know, what's truly fascinating here isn't just growth, but the quality of that growth. There's a consistent positive trajectory across all the major financial metrics for Q1 FY26.
Okay.
It signals, well, more than just market expansion, I think.
Okay, let's unpack that then. What are the headline numbers that really tell us the story of this quarter? What's the core message they're sending?
Okay, so Dollar Industries reported robust year-on-year growth for the quarter ended June 30, 2025. The real standout is profitability.
Right.
Their operating income grew a solid 19.6% year-on-year, and that was driven by a pretty impressive 18.7% jump in sales volumes.
Okay, good volume growth.
Yeah, but here's where it gets really interesting. Their profit after tax, or PAT, it soared by a remarkable 39.3% year-on-year. That's up to $213 million.
Wow, 39.3%. That's nearly double the revenue growth rate.
Exactly. And their earnings per share also jumped significantly, from 2.70 last year to 3.76 this quarter.
Okay, that nearly 40% jump in profit is staggering, especially like you said, compared to their revenue growth. Does this suggest a fundamental shift, maybe in their cost structure or product mix, rather than just, market expansion?
Absolutely. I think that PT surge is a strong indicator that their strategic pivot towards high-margin products and more efficient modern distribution channels. It isn't just theoretical anymore.
Right.
It's directly translating to the bottom line. It shows a far healthier profitability trend than maybe the overall revenue growth alone would suggest. And their gross profit and operating EBITDA also saw strong increases, maintaining healthy margins. So that kind of reinforces this picture of improved efficiency.
Okay, so they're clearly driving strong numbers. But, for a company with such deep roots in traditional retail, how are they actually achieving this growth, particularly through these new age channels?
Yeah, that's the key question, isn't it?
And does this aggressive shift pose any risks, like to their existing distribution network, or is it a seamless expansion?
Well, this raises that important question.
Right.
What's truly powering these results? The management commentary points to a pretty clear strategy focused on modernizing their reach.
Okay.
And a significant highlight this quarter was the powerful performance of their modern trade, e-commerce, and quick commerce channels.
Right.
And these aren't just incremental additions. They delivered a massive 65.2% year-on-year growth in revenue.
65%. Wow.
And an even more impressive 82.0% growth in volumes through those channels.
82% volume growth in just those channels. That's phenomenal. Okay, maybe break that down a bit.
Yeah.
What exactly do they mean by modern trade and quick commerce for listeners who might not be familiar?
Good question. So modern trade generally refers to organized retail, like large format stores, supermarkets, distinct from the traditional mom and pop shops.
Got it.
And quick commerce, which is essentially that hyper-local, ultra-fast delivery service model, that alone contributed a notable 3.1% to their revenue this quarter.
3.1% just from quick commerce. That's quite something.
It really is. It highlights their success in tapping into this, rapidly expanding consumer need for convenience. Overall, these modern channels now contribute 12.2% to total operating revenue.
Up from 8.7% last year.
Exactly, a significant jump. And beyond channels, their Force NXT brand also posted impressive growth. So it all indicates that their strategy of focusing on high-margin products and expanding into these new distribution avenues is really paying off.
And it sounds like, so far, it's an expansion rather than hurting their traditional networks.
It appears that way, yes. More additive than cannibalizing.
Okay. It sounds like they're really adapting to the modern retail landscape, consumer habits. For years, Dollar has been almost synonymous with men's innerwear.
True.
But that perception seems to be rapidly changing. How are they actively diversifying and transforming their brand perception? It seems like a big shift.
It is. And connecting this to the bigger picture, Dollar Industries is actively transforming its brand perception and product offerings. Their strategic priorities include leveraging a new brand architecture and diversifying their portfolio in adjacent segments.
Like adding new pieces to the puzzle, you said.
Exactly. Think of it like that.
So tell me more about this brand transformation. I mean, innerwear to raincoats and lingerie.
Yeah.
It sounds like Dollar is saying, we've got you covered head to toe, rain or shine.
Huh. Yeah, something like that.
Is this diversification a natural evolution or more of a strategic pivot to capture, more of the consumer's wallet?
Oh, it's definitely a strategic pivot. They've created distinct brand categories: Dollar Man, Dollar Woman, Dollar Junior, Dollar Always, Dollar Therm, and Dollar Protect.
Okay, a whole family of brands.
Right. And the goal is to fundamentally shift that perception that Dollar is solely a men's innerwear brand. They want to enhance consumer connection, cater to a wider customer spectrum, premium, mass premium, economy price points.
And targeting millennials specifically, I saw.
Yes, specifically aiming to connect with millennials. And as part of this, they've launched the Dollar Protect rainwear line. They also introduced the Dollar Woman lingerie line.
How's that doing?
Well, in Q1 FY26, the women's brand revenue already contributed 7% to the total.
7% already. That's pretty quick traction.
It is. And they've brought in new brand ambassadors, too. Yami Gautam for Dollar Woman, Akshay Kumar for Dollar Man, to really amplify this new image.
It's certainly impressive to see a heritage brand diversify so aggressively. But what are the biggest hurdles, do you think, or competitive pressures they face in establishing themselves in these new categories? Like women's lingerie, that's already a very crowded market, isn't it?
You're absolutely right. It's a competitive landscape. The challenge really lies in building brand trust and recall in these new segments where they don't have the same legacy.
Makes sense.
Their strategy seems to be leveraging their existing distribution strengths and manufacturing capabilities, but clearly differentiating these new lines, like with Dollar Woman. It's about convincing consumers they can deliver the same quality and value in these new product areas.
Right, transferring that trust. Okay, so beyond products, their operational backbone is undergoing a significant overhaul. You mentioned Project Lakshya and digitalization. Project Lakshya sounds, well, monumental.
It is quite ambitious.
What's the biggest operational challenge in shifting from a push model to a demand pull model across such a vast network? That sounds complex.
It is complex, and that's a great question. Precisely, they're aiming to reinvent their entire distribution model, moving from basically pushing products onto retailers, hoping they sell,
Right.
to a replenishment-based or demand pull environment with Project Lakshya. This is where actual consumer demand at the retail level dictates what gets replenished.
Making the supply chain much more efficient, presumably.
Exactly. Much smarter, much more responsive. But the biggest challenge is orchestrating this shift across, thousands of retailers and distributors. It involves mapping the network, enrolling retailers, bonding programs, and implementing sophisticated systems.
Okay, what kinds of systems are we talking about here, and what do they actually enable for Dollar?
They're deploying things like auto replenishment systems, ARS, and distributor management systems, DMS, at the distributor level.
ARS and DMS.
Yeah. ARS automates inventory replenishment based on actual sales data, which helps minimize stockouts but also avoids overstocking. DMS gives them real-time visibility into how distributors are doing, their inventory levels, and so on.
So better stock management, better visibility.
Correct. And as of Q1 FY26, they had enrolled over 58,000 Lakshya retailers and 32 Lakshya distributors. It's a big rollout.
Wow.
And for digitalization more broadly, they've also integrated ARS at the supply chain level, implemented an after-sales service app for retailers, and, importantly, successfully transitioned to the SAP HANA S4 ERP system.
Ah, the big ERP upgrade.
Yes. Think of it as a powerful new central brain for all their company data. It gives them that real-time end-to-end visibility, which is just crucial for making smart, fast, strategic decisions in today's market.
Right, seeing the whole picture instantly.
Exactly. They've even implemented automated telecalling to streamline communication. It's quite comprehensive.
That's a truly granular look at operational efficiency. So they're not just optimizing internally, they're also looking outwards for growth. Tell us about the strategic alliances they're forging. What are those partnerships aiming to achieve?
Yes, that's another key part of their growth strategy, forming significant alliances that can open up new markets and brand opportunities. A big one is the 5149 joint venture they've entered into with GOAT Brands Lab Pite for Pepe Jeans Inner Fashion PVT Ltd.
Okay. Pepe Jeans Inner Fashion.
Right. And this isn't just a simple partnership. It's designed to establish a multi-brand distribution setup for men, women, and kids' undergarments across various categories, everything from athleisure to lingerie.
So leveraging Pepe Jeans' brand pull in those segments.
Exactly. And the expected outcomes include widening their supply to end consumers through DTC channels, that's direct to consumer, selling straight to people online,
Right.
also exploring inorganic growth, maybe brand acquisitions, and really establishing a foothold in those super premium brands.
Interesting. Okay, so with all this ambition, strategic maneuvering, operational overhauls,
Ah.
how does it look on their balance sheet? Are they managing to keep their financial house in order while pursuing such aggressive growth?
Well, from a financial health perspective, the picture looks pretty positive, actually. Their net debt decreased.
Oh, decrease.
Yes, decreased from about 3.3 billion in March 2025 to roughly 2.8 billion in June 2025. And their net debt equity ratio improved too, from 0.38 down to 0.32.
So they're becoming less reliant on debt, which is generally a good sign.
Generally, yes, it indicates prudent financial management alongside the growth initiatives. Their cash conversion cycle stood at 173 days in Q1 FY26.
173 days. How does that stack up? Is that good, bad, average?
Well, it tells us how efficiently they're turning their investments in inventory and sales back into actual cash. 173 days isn't, super short, especially in apparel. The key thing is to track its trend over time to understand their liquidity management and operational efficiency.
Okay, so something to keep an eye on.
Definitely. And for shareholder value, the company has a consistent dividend payout history. They explicitly state they're judiciously allocating capital balancing dividend payouts with investments for growth.
Makes sense.
They also plan to cap annual advertising expenses at $1 billion, expecting ad spends as a percentage of revenue to actually decline over time.
Which should help profitability in the long run.
Exactly. Aids the bottom line.
Okay, so connecting this back to the bigger picture.
Hmm.
You mentioned Dollar Industries is built on a strong foundation. That legacy must play a role in their moves today.
It absolutely does.
Tell us a bit about that heritage.
Yeah.
Looking at the journey from Pawanee Textiles back in 1972 to Dollar Industries today, what's maybe one pivotal moment or decision that really shaped their trajectory?
A pivotal moment. Well, the company was established in 1972 as Pawanee Textiles by Sri Dindayal Gupta, who's now their chairman emeritus. His biography, A $1 Million Smile, just came out, chronicling his journey.
Right.
But a pivotal decision, I'd say, was undoubtedly their early commitment to vertical integration. They boast a fully integrated manufacturing unit, apparently a first for an Indian innerwear company back then.
And that gives them control, right, over quality.
Cost. Immense control, exactly. That's a huge advantage. And today, Dollar Industries holds about 15% market share in the organized Indian hosiery space. Plus, they have a global footprint, exporting to over 15 countries.
15% of the organized market is pretty substantial.
It is. And that export piece, while smaller, contributed $165 million to revenue just in Q1 FY26.
Okay, that's a strong foundation. What about their broader impact and future outlook? Beyond the numbers and products, what's their commitment to sustainability and responsible business, ESG factors? How does that tie into their long-term vision?
Their commitment extends significantly to ESG, environmental, social, and governance initiatives. And importantly, these aren't just, feel-good efforts. They seem integral to their long-term sustainability and even operational efficiency.
Oh, so?
Well, environmentally, they operate a zero liquid discharge plant. It has a 400 tons daily capacity, meaning they recycle basically all their wastewater.
That's significant in textiles.
Very. They also have a 5 MW solar power plant in Tirupur and 4 windmills with a total 13 MW capacity. This isn't just about being green, it's a strategic move to control energy costs and ensure sustainable operations in what is a resource-intensive industry.
Right, sustainable and smart business.
Exactly. Socially, they focus on employee engagement, skill development, diversity inclusion, community support. They mention significant donations from medical, educational, and animal welfare causes.
And governance.
On the governance front, their board looks diverse and experienced. They highlight having 50% independent directors, 75% independent directors on the audit committee, and 2 women independent directors.
Okay, it's like they're ticking the boxes there. So bringing it all together then, what does this aggressive innovation, this focus on new channels, new products, combined with this commitment to financial and social responsibility, what does it mean for their long-term trajectory? Are we looking at a complete transformation of the company?
I think transformation is the right word. Their medium-term vision is indeed to become an aspirational brand, offering premium and super premium products. They're leveraging those operational efficiencies and new distribution models we talked about,
Right.
and the long-term vision to emerge as a complete brand and distribution company across multiple fashion wear categories. They explicitly aim to be India's leading and most loved innerwear brand, delivering fashionable yet affordable apparel and ultimately enhancing the lives of people connected to Dollar.
So moving beyond just manufacturing innerwear to becoming a comprehensive lifestyle brand.
Exactly. It's a strategic evolution.
That was a truly insightful deep dive into Dollar Industries Ltd. It's really clear they're not just resting on their laurels, are they? They're actively innovating across product lines, distribution, technology, all while keeping a close eye on financial health.
Indeed. Their Q1 FY26 results really reflect a company leveraging its integrated value chain and market reach. They're expanding into new segments, new channels from modern trade all the way to quick commerce. It shows a pretty clear roadmap for future growth, I think.
So thinking about the key implications for you, our listener, from this deep dive. As Dollar Industries continues to weave its legacy with these new threads of innovation and digital integration, what impact do you think their focus on fashionable yet affordable and reaching customers conveniently will have? Not just on the apparel market itself, but maybe even on how consumers in India think about and access their everyday fashion choices. Is this maybe a blueprint for other traditional brands looking to modernize? Lots to think about there.